Happy Friday, traders. It's 8:01 a.m. Chicago time on the 9th of October 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overnight news and what's been driving this market is really a result of yesterday's FOMC minutes. We had a very strong trend form off of the minutes. The minutes are quite revealing. FOMC minutes yesterday showed hesitation in the Fed's resolve to lift off with interest rates in a short run. The report quoted, "Prudent to wait for clarity on outlook before hiking." That is a very open-ended sentence as far as it comes, as far as it relates to when the hike would come. The market reacted very aggressively to that statement. This sent the U.S. index markets running up and treasuries lower, U.S. dollars down again today. Yesterday after the close, Alcoa kicked off earnings by reporting 7 cents versus 14 cents in revenue, with revenue also missing slightly. It further lowered its forecast as a result of the China slowdown. European markets are higher overnight as a follow-through on yesterday's U.S. rally. They sold off after they opened, and then they shot up. We'll look at them in a minute. Euro's now breaking through recent highs along with crude. Crude is out, has taken out its balance area high and has broken out of balance. It's been in balance for quite some time. As far as what we've got cooking for today, what's on the menu? We've reported import prices this morning. Import prices came in at negative 0.1% versus negative 0.5%. But we still have, at 9 o'clock, we have wholesale inventories. Let me clear my throat. We have wholesale inventories expecting 0%, and we have wholesale trade sales expecting negative 0.54%. Baker Hughes rig count at noon Central. We have Fed's Speaker Lockhart, which you might want to pay attention to. This whatever he's saying. Lockhart's been moving the markets around. Lockhart's commenting on the economy. He's a voter, and he's commenting in New York. That supposedly starts in 6 minutes. Fed's Evans also speaks at 12:30 today on monetary policy. You'll want to pay attention to that as well. Other than that, it's pretty. That's pretty much it for Friday. Let's have a look at our charts here. So, pretty a pretty primedictable open yesterday in trade until the FOMC came along. The primary expectation yesterday, the primary hypo, was for open in range in value, choppy open, likely to bounce around. If you remember, I drew it on here. Open, likely to bounce around, looking for a test of that 87.25, but spend most of the day just bouncing around and forming balance. That's what was expected. That's exactly what we got. We got very tight opening swing here. You can see that it just did not go anywhere. The volume on that, I'll show you the volume on that. So here's the on this chart. What you see here, these little yellow lines represent the 20-day median of volume at each bracket. And on this chart, we're using a 15-minute. This is a 15-minute chart. This is my kind of a bias look back setup chart. I'm not really attached to time in trading, but this chart allows me to see several days worth of profiles, and that's why I use it. But in this chart, it shows you the median as the yellow line, and it shows you the red or green bar, and the colors based on if the bar closed higher than the prior than it's open, and so on. And on most days, you have in line the volumes in line with the 20-day median or better. And you can see yesterday we just have these um, little wicks all along, and it's just volume was down about 20 to 25% in the morning until the FOMC release came along, and then we have this very strong spike on a strong up move, and then from there on out, our volume was higher than the 20-day median for that time period. So this is pretty serious participation on that move yesterday. Obviously not very predictable, but we did finish up. We did play out the primary hypo for a while. We did finish up on the high, and here we are again, entertaining a trend day finish with a high volume node right up against the high. Look at the volume that went off on this on the end of this rally. I mean, it's pretty intense. So much volume went off at 2005. This looks like it's the result of an option hedge or something. There must have been a lot of open interest at that strike 2005 because we traded 43,000 contracts, 43,016 contracts at that one price. And the market finished in the upper quarter of the profile. And what does that do? For those of you who have been listening for years, what is that likely going to do? It's likely to push to new highs overnight. It's likely to take out this 0875, and that's what we got. We went to 2014, and recall the FOMC high is 2011.75. We went to 2014. We're back, and we're trading at 2008 right up against yesterday's high. So we're opening in a very sensitive spot, so to speak, as we flirt with the edge of yesterday's profile. Looking at the overnight, here's the European Open right here, and we just rolled over and tested 98.75. Excuse me, 1 second. Tested 98.75, and then we push right up. And this is a pretty broad move actually in the markets. If you look at the overnight markets, look at the euro and so on, you'll find that there's a lot of breadth with this move. Pretty decent delta that went with it. This is a lot of bulls coming out of the woodwork and pushing. Let's take a brief step back in time and look at where we are in the big picture. So what we've done is we sold off at the end of August. We tested. We had a very impulsive move down. We tested back up. The expectation is for chop for some time and a test lower. The main target being this MC point of control, MC high volume node, or a composite high volume node here, which was just below, is at 2050, and that was expected right here. I was looking for this to push down and at least retest this low, but what it did is it actually held that extreme. That's not a straight line, is it? It held that extreme, and it could not get into the excess that was left behind on the 24th of August, that big volume day and big range day right here, and it ended up getting a bounce. And then this day really signified a lot. This day essentially showed us where the buyers are at, where the buyers are seeing value and price, and pushed us right through. And then we have the gap up this week and the step up. Now that we are into the stem of the Fed day, the expectations, of course, given yesterday's action, is to take out this 2011.75 and start working its way up into this microcomposite profile right up here. So we're starting a template. So we need to let's move this to the back. So we need to start looking at, okay, what happened on this day? What does that profile look like? What's the support and resistance on that profile? And those will be the targets for today. If I include yesterday's action, you can see that the profile suddenly has that high volume node up here, and we are basically leaving behind this very blunt balance zone that we've built over the last 2 months, a month and a half, basically 6 weeks or so, and we're moving away from it. We've traded 55 million contracts in this range. My throat keeps burning up here. We've traded 55 million contracts in this range. There's plenty of fuel now to take us up to 84 and a quarter. It's going to be a slow grind on our way up there, but that's where we're likely headed. The shorts are likely to continue to get squeezed. So the look for today, tough. It's a tough spot to be trading at. Looking at the overnight, we have our point of control, the point of control just above yesterday's high. We have a pretty bulky profile. There's a fair amount of fuel in here to give us a quick burst on the open. 232,000 contracts have traded. Inventory is basically flat to slightly on the buy side. So we're likely to not see very much. This is likely to be a very choppy and turbulent open. There's a huge incentive now for the intermediate time frame to either come in as a seller and squeeze these longs out, but there's also a huge incentive for intermediate players to come in and hop on the ride as daily charts form and moving averages cross and whatever else. There's an incentive to push higher. What that's likely to leave us with this morning is a two-way market that has pretty wide swings, 5.5, 6-point swings on a 1-minute chart. So this is what I'm looking for today. I'm not able to handicap which side has the edge, except to say that, hey, the trend is strongly up, and we are moving out of balance into the prior area that we were in. We are past the FOMC. If we open up here, the FOMC high is at 2011.75, and we've taken that back. So the market has lost a lot of the fear, and the flight to safety trade that we were in for the last 6 weeks is pretty much unwinding or has unwound. So overall, this looks like, if anything, it could push down, but overall you're looking for a market that's likely to push up. We're going into Friday. It's a long weekend for some institutions. Monday is Columbus Day here in the U.S. The markets are open as normal on Monday. The New York Stock Exchange as well as futures are open just as they normally would be. But overall, it's just the location we're in. It's just really difficult to tell which side's got what. So I expect it to just have some pretty heavy swings on the open. Look like it's going to break, but not really. And then I'm going to wait for one side or the other to take control. This is not a good day to stake a lot. I'm going to tell you that. It's a good day to maybe cut back on size if you trade it. If you're in equities, maybe cut back on your lot sizes, and just focus on what the market's telling you. A quick sweep overview on everything else. If we look at crude oil here, crude oil's been in this tight balance range for quite some time. I'm gonna keep these clean here. And they have just completely broken out. I stopped the MC on the 5th, and everything beyond there is looking like a breakout trade. The crude oil target now 56.74 is the key target above, the key test area above, and that's probably where it's headed. It's trading at $50 right now, the November crude. At $50, looking for $56 on that product. I want to show you something else. Whenever there are big moves in the market, wow, that is a bright color. Let's tone that down. Whenever there are big moves in the market, you'll want to take a quick glance at treasuries and see where the money's going. Um, and it looks to me like if we go back and look at where we were when the Fed announced, here's where we were when the Fed announced. It's way back down here. So equities, if you invert the equities chart looks like we dropped, we balanced, we tried to take out that prior low, and then we moved up and have overnight taken out this low in equities if you invert them. The relationship is inverted between treasuries and equities. And so what I'm saying here is the relative spot for treasuries ought to be, would normally be, if these were moving in confluence, would be way lower than 126 handle in the 10-year notes, and the 10-year notes are hanging out way up here. What does it mean when the 10-year notes are hanging out way up here? It means that really the longer term yield curve traders do not expect interest rates to move very far. They are not coming down here to meet where we were at the FOMC, which is this day here. And so the market's basically not expecting the Fed to do much for quite some time, and that is really fueling what is happening in the indices and across the board. So if you look at a US dollar chart, you'll see that the dollar's fallen again and continues to fall, which brings us to the euro. Our friend the euro here. If we minimize the noise in this chart, you'll see that the euro's had, it pushed up. This was the Fed day right here. It came all the way back and it's moving strongly. Oops, sorry. And it's moving strongly. I should have turned that off. It's moving strongly towards. Sorry, that's totally distracting. It's moving strongly towards that high from Fed day. So for right now, it looks like the flight to safety has reversed and the money's being put to risk again. I'll leave you with that thought. I've lost my train of thought. My wife's message threw me off there. But in any case, I'll catch you. This is Friday again. I want to remind you that it is Friday. We're going into a weekend here. Just mind your risk as always, but especially mind your risk today. It's not a good day to get caught up and get emotional about the trade. Good luck today, and I'll catch you tomorrow. Take care.